with us Mr. N.K. Minda, the CMD of the company. Hi, Mr. Minda. Thanks so much, sir, for joining in. Another strong quarter coming in from you. A few years ago, you were doing only around 1,300 crores in terms of revenue. Now you're already doing 3,500 crores. What's the target for FY18?
See, we should be, as I said before last year, we should be growing an average of around 25%. And that is, mitigating with the kind of in sector growth, which is, we are always, I'm always particularly bullish around 10% on average. And then we have added some of the new product line also in the recent past, such as alloy wheel, tinder, hoses. And so therefore, at an average 25% growth, so we should touch around 4,500, 4,600 crores.
Okay, so you should continue with a 25% growth run rate with FY18 revenues hovering around 4,500 crore at least. Good morning, sir, and thanks so much for joining in. In fact, in that same period that my colleague was referring to, your profit growth has been far higher than your revenue growth. What should we expect on margins in FY18 and what would be the key drivers?
So the margin would be again, better, we touch this 168 as you know.
Right.
So we should be doing around 20, 25, between 20 to 25% growth on the margin.
Okay.
So which will around 210 and something we are estimating. And that it is the reason behind, as I said before, that there are new products which have started utilizing the capacity. So therefore, the margins are going to be better than adding to that.
All right, Mr. Minda, so margins in terms of operating profit margins, it should be at around 11.5 to around 12%. Am I right on that?
No, this margin I was talking about the PAT.
Right. Operating margins is what I'm asking for.
The EBITDA, I would say that around 11.5%, which was our last fourth quarter EBITDA. So between 11.5 to 12, so on the conservative side, on the 11.5% we should be, and on a yearly basis.
Okay, you spoke about the new product launches seeing increased capacity utilization. What is the current utilization? What do you expect it to go up to? And if you could elaborate a little bit more about these new products, what is the kind of investment you've put in and the revenue opportunity from them?
Okay, so one of them is the biggest one is the alloy wheel. As of now, we are producing almost 50% capacity. Our capacity is 120,000 alloy wheel per month, and we are using now 65,000 per month average.
Okay.
So this is one area, and the uses of alloy wheel is increasing in the car, in all the segment, And second, it was the render acquisition, which we did it last year. So we are in a process of synergizing and integration is going on, and which will lead better results. And the third one was the hoses, the brake hoses and the fuel hoses. Here again, the capacity utilization is to the tune of 40-50% only as of now. So the new models, we are getting the new businesses from the various OEMs, and this will also increase the capacities. And there are new product line which have added in this Onkyo speaker, TTE, Catolec, etc.
Right.
So a few of them will add it on a year-on-year basis.
All right, Mr. Minda, I just wanted to ask you, you're guiding us for around 4,500 crores in FY18. Now, given that a lot of these capacities that you mentioned are either at around 50 to around 60%, at optimum capacity utilization levels, say by FY19, FY20, what could your revenue number look like?
So, as I said, that around 25% year-on-year, whereas the industry's estimation growth is around 10%. So year-on-year, we are targeting 25% by addition of our new product and the better capacity utilization.
Right, sir. So what we're asking you is, with the current capacity that you have and which is coming on stream, what can you do? I mean, will you require more capex?
I would say the 7,000 by 1920.
Okay.
We should be touching around 7,000.
Perfect. Yeah.
Sir, this new plant which is setting up in Gujarat, is it for the new product line that you were earlier referring to, or is this incremental?
Both. Like we are setting up one more alloy wheel plant in Gujarat for Maruti. That is one, and our existing product, where the transport costs are high, so that also with the Maruti, 500,000 capacities. So, and increasing more in the near future. So, our different product line has to have business there in the local area in Gujarat.
All right, so just a quick question. Do you require to raise any more money? I think you had done a QIP earlier. And if you could just give us a sense about what is your balance sheet looking like? What is the cash in your books? What is your debt in your books?
So our debt is, as of now, 0.5 to the, it's around 500.
500 crores.
500 crores. So 0.5 the debt as of now. And what was your second question? I don't know.
Will you raise any more money for any more?
No,
are you fully capitalized?
No. We are managing with this our QIP and our internal approvals.
All right.
What are you expecting from this JV that you've entered in with TT Electronics? What should be the revenues we should expect from this JV?
Around 250 crores in next 2 to 3 years' time. See, there is an RPAS regulation is expected to come, the reverse parking system you must have read. So if, that they are very strong player in that RPAS systems. So 250 crores in next 2 to 3 years' time.
All right, Mr. Minda, final question from my end. I'm just having a look at it on
Please.
Right. If you could just tell us what is the promoter holding currently? I was just looking at it as a disclosure on the BSE. April 3rd, it's showing at around 68%. Is there any change in the promoter holding in the last quarter or so? If you could help us out with that number.
Not really. I mean, around the same.
The reason I ask you, sir, because it's showing that it's come down from 74 to 68%.
That is because of the QIP,
Okay, only because of the QIP.
Only because of the QIP.
All right.
Thank you, Mr. Minda, for joining in, and all the best for the coming quarters. Strong Q4.